is my goal today to introduce you to pricing in the merchant services industry. While it's incredibly complex, we'll start with building your pricing foundation today. This course will go over the basics, some methods of pricing, as well as competitive pricing strategies to give you a sales advantage in the field. There are 4 components of pricing. The basis of pricing is interchange and assessments. Let's start here. Interchange is based upon rules and rates that are set by the card associations like Visa, MasterCard, and Discover. Each interchange category is set based upon the specified risk level of the transaction. A transaction that is higher risk would cost more in interchange. You might be surprised to learn that on average, 90% of the fee that is paid by a merchant on a transaction is interchange, and interchange is kept by the cardholder's issuing bank. Assessments and interchange go hand in hand and are often set together in one breath. Assessments are not kept by the issuing bank and make up a much smaller percentage of the total transaction fee. Assessments are under 15 basis points and are kept by the card brands. That means that if the current assessment rate for Visa is 11 basis points, then Visa keeps 0.11% of the transaction. The next component of pricing is cost. This is the price that all sales partners pay to their providers like Pivotal Payments. This cost includes back-end operating expenses, network fees, and company overhead. Costs are generally found on a Schedule A or a Schedule B that is part of the sales partner contract. The final component of pricing is what we're all in business for, the margin. Everything priced above interchange, assessments, and cost would be the contribution or bottom line. In other words, your residual stream. Here's where things begin to get a little complicated. Interchange is comprised of more than 900 categories today. That means that any given transaction can be charged one rate out of the more than 900 different rates. Each card brand has their own set of rates. Visa has theirs, MasterCards are slightly different, and Discover has another set. There are many types of cards in circulation and different ways that a transaction can be accepted, such as face-to-face, over the internet, or at a gas pump. Each brand splits their rates into 2 primary groups, signature-based debit and credit. Remembering that interchange is based primarily on the risk of a transaction, take a moment to think about what type of transaction would cost less in interchange, debit or credit. That's right, debit is cheaper as it poses less risk in the transaction cycle. Let's talk about the types of transactions. There are essentially 3 types of transactions: qualified, mid-qualified, and non-qualified. The way that these are priced can vary merchant by merchant. We can pass through true cost, we could bundle a flat rate, or we could put the merchant into a tiered pricing plan of some sort. A qualified transaction can be credit or debit. It is generally always a consumer card, not a card with anything special that's tied to it, such as a rewards program or a business spending account. For a retail merchant, a qualified transaction would be one that is swiped at the point of sale, not hand-keyed, and it should be settled within 24 hours. For a mail order telephone order merchant, referred to as MOTO, they will never have the opportunity to swipe a card. Therefore, a qualified card for a MOTO merchant would be hand-keyed and again settled within 24 hours. A mid-qualified transaction can occur for many different reasons and are more costly than qualified transactions. We'll cover some of the influences of interchange in just a moment. A mid-qualified transaction might be hand-keyed rather than swiped at the point of sale. It could also be a swiped consumer credit card with a rewards program that's tied to it. For a MOTO merchant, a key-entered rewards card would be considered mid-qualified. A non-qualified transaction is the most costly of all transactions, and like mid-qualified transactions, can occur for many different reasons. Some common interchange downgrades that hit non-qualified rates are hand-keyed rewards cards. If a merchant settles their batch outside of 24 hours, that can also cause a transaction to downgrade an interchange. Business, corporate, and purchasing cards will never qualify an interchange for any card brand. They are always considered non-qualified transactions regardless of whether they are swiped or hand-keyed. Remember that there are more than 900 combinations of possible transaction influences that can land a transaction in a qualified, mid, or non-qualified interchange category. Let's go over a few key facts that you should know about interchange. Most commonly, interchange is adjusted twice per year, every April and October. This means that the card brands review their respective categories and can inflate or deflate rates as they deem fit. Each category is made up of a percentage and a fee or a flat dollar amount. For example, Visa's qualified credit category is called CPS Retail, and the rate is 1.51% plus 10 cents. There are a few categories that might be just a percentage or just a flat dollar amount, but generally those are reserved for special programs that unique merchants can be enrolled in. Interchange is public knowledge, and it's posted out on each card brand's respective website. All merchants, sales partners, and acquirers can access the information on demand. Both merchants and cardholders have an impact on how a transaction qualifies in interchange. A merchant, for example, can cost their business more money by not settling their terminal at least once per day. They can also risk interchange downgrades by processing on outdated technology, including terminals that have been phased out by manufacturers. There are some things that a merchant just cannot control and will always cause interchange downgrades. These are cardholder behaviors or influencers. Many consumers have a brand or a card preference. For example, Discover and American Express cardholders will sometimes favor those cards because of their lucrative rewards programs. These transactions cost more in interchange because of those very rewards programs. The condition of the card also plays a key role in interchange qualification. A card that is bent or old may cause the magnetic stripe to not be read through the terminal, which causes the merchant to hand key a transaction, thus causing a downgrade in interchange. Assessments range between 10 and 13 basis points today, depending on the card brand and the size of the transaction processed. MasterCard currently charges an additional fee on top of their standard assessment for transactions over $1,000. Assessments help fund card brand advertising, as it's the only income that the card brands make on a transaction. Because so many transactions are ran each day, those assessment fees collected add up quickly and help the brands pay for consumers to remember those priceless commercials or the slogan, "It's everywhere you want to be." We're all probably familiar with Discover's "It pays to discover" or their charming new advertising commercials. We're also often familiar with the American Express commercials, especially the recent ones starring the hilarious Tina Fey. These are all examples of assessments at work. There are two types of debit transactions: PIN-based debit and signature-based debit. A merchant wishing to accept PIN-based debit must be outfitted with a device capable of allowing a consumer to enter their unique 4 to 6-digit PIN. These devices can be internal, as a part of the credit card terminal, or they can be external, connected to the credit card terminal through a wired or wireless connection. Signature debit transactions occur when a consumer runs their bank-issued debit card as they would if it were a credit card. They swipe the card and sign for the transaction. A PIN-based transaction would allow the cardholder to enter their PIN rather than signing for the transaction. PIN transactions are treated similarly to cash. The funds are immediately withdrawn from the consumer's available balance at their bank, and refunds are often handled as cash in place of a credit back to the card. When it comes to pricing a merchant application, there are many different things to consider. It's important to sell on other benefits outside of price, but understanding merchant pricing is imperative in speaking intelligently and in acting as a consultant to your prospect. One of the more complicated pricing methods includes enrolling customers in unique interchange programs. These programs are only available to select groups of merchants like utilities companies, business-to-business merchants, and supermarkets, to name a few. Learning more about these special interchange programs can help protect your residuals while still offering savings to your merchant base.